Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my first micro scenario where we're looking for an expanding flat ABC to the downside for then a wave Y, where from a trading psychology perspective, this scenario is very interesting. The reason is that we have a double top over here at 31.4k, and people of course have been shorting this range, and where do they then put their stop losses? Well, probably above either that high or that high. So price moving to the upside can trigger the stop losses first of all, but also you'd be baiting some breakout longs that are looking for more upside the moment these double tops are taken. Now what's interesting is of course the double top by itself provides some liquidity. Breakout longs can provide liquidity, and over here at 31.7k there is also a high from the 2022 range which also provides liquidity for them bigger short positions, potentially filling their shorts and looking for a move towards the downside in then a wave C. Now if we do look at where price is right now, this is actually very important because this support box over here is my final support before potentially looking for the 29k levels, and currently price is testing the final naked point of control that I have at 30.5k. So you want to see price finding support over here for this potential scenario towards the upside. If price is gonna close higher time frame candles below this level, then I'd be looking for a move towards the downside, towards 29k, where we again also have another daily naked point of control. But the target area for a wave Y, most common target area, is between the 1 and the 1.236, taken from the high to the low of W to the high of X, which is between 29.4k and 28.9k. If we then go to a scenario that KG posted in the Discord group, which I think is very interesting as well, is that he's looking at this range from a little bit of a different perspective, which I really like. So of course he has the impulse to the upside in a 5-wave count, but he is looking at this to be a bigger wave A in green than a WXY in B, and then he's looking for a wave C to the downside. So basically what he has done is this is his wave A. So he has this as a wave A, looking for B, and then he's looking to the downside in a wave C. His most common target area for wave B is between the 1.236 and the 1.38, which is between 31.9k and 32.2k, which is then also a very interesting area, also because of the 2022 range highs that we have right above that area as well, for then a wave C impulsive structure towards the downside. Inside of this wave B, he is then looking for a WXY, which is then a WX and eventually a wave Y. But then again, for me, this is like the final support for price to move towards the upside. If it is going to go deeper, then yeah, there's not too much support that I have down here. If we then go to the second bearish scenario that I have, we could be looking at a flat over here. So it's a 3-wave in A, 3-wave in B, and then we have a wave C to the downside, which is a 3-3-5-wave move. Now a regular flat is quite rare. Expanding flats are most common, so that's something to keep in mind from a probabilities point of view. But it is a valid potential regular flat, as price has hit the 0.9, which is a minimum target for a wave B in a regular flat, and then now you'd be looking for an impulsive structure to the downside, where then the target area is wave C, which is the same as wave Y, which is currently sitting between 29.4k and then 28.9k. Now if we zoom in to this scenario, you can see that I wrote something over here, because in this scenario wave C is a 5-wave structure to the downside, an impulsive move to the downside. That is what you'd be looking for. But if we look at this structure over here and we think about the potential impulsive scenarios to the downside, there's something going on. So first of all, does this look like an impulse, meaning a 5-wave move? Then you have to have something like 1, 2, 3, 4, 5. Well, that is not possible, because then wave 3 is the shortest wave, which is not allowed. Can this then be a diagonal? Well, we can pull some trend lines over here. So the first one, and then we have the second one. However, wave 5, as you then can see, because you'd be counting this as a 1, 2, 3, 4, and then a wave 5. Wave 5 is the longest wave, which is not allowed in a diagonal, so that is also invalidated. And then you have potentially a triple 1, 2, meaning you have a 1, 2, 1, 2, and then a 1, 2 for a bigger 3 towards the downside. Preferably in a 1112 scenario, you also see price making a diagonal, which then is a contracting diagonal. But then again, this move over here goes outside of that diagonal. And another little tip is that in a 1112, preferably you want to see the waves becoming shorter, because this 1-2 is the highest degree wave. This is the second highest degree, and this is the third high, or like basically each 1-2 is a lower degree Elliott wave structure, meaning that the first 1-2 usually takes the most time to form, and then the second one, and then the third one. So they become shorter, they become more and more condensed. But as you can see, this wave 2 in time is longer than this one, and also this potential third wave 2 is also longer than the first one. So that is a bit odd. It is still possible, especially if price is going to continue pushing to the downside, then this is the scenario I would be looking for. But at the moment, this 1112 doesn't look very nice. I do quickly want to also mention the resistance area we have above, as I didn't mention that in my previous video, which is between 30.9k and 31.1k, with some interesting resistance over here in case price is going to look for that move towards the upside. If we then do look again at a 1212 scenario, which is the only bullish one that I have left, it doesn't look good for the bulls, right? The bearish scenarios have much higher probabilities. And again, like, is this an impulse, a 5-wave move to the upside? Where if that's the case, and this is then a 1, 2, 3, 4, 5, we never got wave 5. Wave 4 is too long. 4 has overlap with 1. Doesn't make sense. Leading diagonal, well, this is an expanding diagonal, which is very rare, so you don't really like to see that. And then a potential double or triple 1-2. Well, again, preferred a contracting diagonal, which is not the case anymore. So yeah, it doesn't look very nice for the bulls at the moment, but this is the only bullish scenario where the invalidation is taking the low of this wave 2. Now, if price moves to the upside very, very impulsively on high volume, because that's what you want to see, as this move then to the upside is going to be a wave 3 of a bigger wave 3, yeah, then we might start to think about potentially this coming into fruition, but as it stands now, probabilities are not high. If we then go to the CVD divergences, we had a lot going on actually today. So over here, what you can see on the AGGR chart is, this was my idea this morning. So in the morning, what I shared is price over here was creating some bearish CVD divergences. So I was thinking, well, maybe we get a move to the downside. And if that is the case, this blue line is going to go a little bit deeper to create more bullish divergences, as it already did. But seeing these bearish divergences doesn't really give confidence for potential, or confidence for potential longs. So then the bearish divergences play out if price would move to the downside, taking this low, which is nice. Then the bullish CVD divergences are left for potentially then a move towards the upside. And that is when we were over here. So we had these bearish divergences, price moved to the downside, created bullish CVD divergences, which was nice. So that was quite interesting. Price then moved to the upside. And what happened then soon after that bounce to the upside is that price started to create very local bearish CVD divergences again. So this is the bounce to the upside. And then over here, lower high on price, higher high on the CVD, as I will show you in a second on the AGGR chart. And then once again, price kept moving down. And then over here, you can see a red candle finishing, but CVD moving up is an in-candle bearish CVD divergence. You don't see those too often. So if we go to the 15-minute, or actually the 5-minute, then you will see the bullish divergence on blue, right? Higher low on price, lower low on the blue CVD. But the problem is it didn't really give a lot of confidence because of the bearish CVD divergence, where over here you can see lower high on price, higher high on the CVD, bearish CVD divergence. Also here, again, lower high on price, higher high on yellow here, as well as on blue. So that's not what you want to see, and that then creates the absorption, as that shows long absorption, market short or market long absorption, for then a push towards the downside, which is exactly what happened at the moment. And now the CVDs are then neutralized on a local time frame. If you then zoom out, talk about the probabilities, well, of course, the bearish scenarios are by far more probable than the bullish scenario that I have, which is the 1 2 1 2. It's the same as basically the video this morning. Of course, the bearish scenarios are currently more probable, where still my preferred scenario, because it is such a nice scenario, would be this. Just from a trading psychology point of view, I would absolutely dig this scenario. That would be very nice. But then I think this support has to hold, right? You want to see a bit of a support, move to the upside, maybe a move down, some bullish CVD divergences. Maybe you want to see RSI, stochastic, whatever your confluence is, for then the confidence to look for longs, for then potentially a move to the upside. If price is going to go through this box to the downside and starts to create candles below over here, well, then I'm more in favor of this scenario, where we're then looking for that move to the downside, and then this is potentially that 1-1-1-2. Even though the probabilities are not really on the side of a 1-1-1-2, it then is going to be the scenario, right? So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.